Hey traders, welcome back. In this video, I'm going to share with you a simple but very powerful BTC scalping strategy. This method is designed for quick trades with clear rules for entries, stop loss and targets. It's easy to follow, and I will explain everything step by step so you can apply it in your own trading. Just a quick reminder, we are sharing high-quality trades in our free Telegram channel. The link is in the description below, so make sure to check it out. Alright guys, let's go through the rules of this simple strategy step by step. First, we will simply mark previous day's highs and low. Second, we wait for the price to take out either the previous day's high or low. Once that happens, we don't jump in immediately. After price takes out the high or low, we wait for it to come back inside the range and then close a 15-minute candle. This gives us confirmation. Now, for the stop loss, it will be placed just above or below the swing high or swing low, depending on our direction. And for the targets, we have two options. You can either aim for the opposite side of liquidity or just use a fixed 2-hour target. Now let's see on TradingView how it looks. First, we will mark the previous day's high and low. If we are looking for a short position, we will wait for the price to take out the previous day's high and close at least one candle outside the range. After that, when the candle closes above the previous day high, we will wait for the price to come back again in the range and close a candle inside it. Here, we can see the price took out the previous day's high but didn't close a candle outside the range. So we will not take this trade. In this second case, the price took out the high and closed a 15-minute candle outside the range, then came back inside. So we can simply take a short trade here on the very first 15-minute candle close in the range. We can place our stop loss at the swing high. We will aim for 1:2 risk to reward ratio. We will place our stop loss a little above the swing high. The reason is, if the price creates equal highs or gives a liquidity sweep, we will not get stopped out. Once we hit 1:1 risk reward ratio, we can simply put our stop loss at break even. For now, let's do a quick backtest to see how this strategy works in the real market. I have opened BTC chart at random time. First, head over the indicators section and search for previous day high and low by Josh Trades. Click on it, and once it's added, you will see it's activated on your chart. This indicator clearly marked the previous high and low levels, which are key points for our setup. We can also open the indicator settings and change the line of colors if we want. For now, I will keep the lines white. Our chart is now ready for trading. For the moment, we will wait for a new daily candle to form before placing any order. Okay, we've got a new day. This line marks the previous day's high, and this one shows the previous day's low. If we want to take a short trade, we will wait for the price to break the previous day's high. Then close a 15-minute candle back inside the range. Once that happens, we can enter a short position. If we want to go long, we will first wait for the previous day's low to be taken out. We can open a long position. First, the price closed a 15-minute candle above the previous day's high. Then, the candle closed back inside the range. We can simply enter a short at the market price. Our stop loss will be placed a little above the swing point. That way, if price creates an equal high or makes a minor sweep, we won't get stopped out. Then, we can simply aim for 1:2 risk to reward take profit. As you can see, our take profit has been hit. Once we secure at least one of our profit, we can move our stop loss to break even to make the trade risk-free. Now, we will wait for price to take out the previous day low, and then we can look for long position. Price closed candle below the previous day low. Now, we wait for price to close a 15-minute candle inside the range. The price closed the candle back inside the range, so we simply open a long position here. Our stop loss will be placed below the swing low and will target 1:2 risk reward. This trade hit the stop loss, and that's completely normal. It's just part of trading. The price once again took the previous day's low and then reclaimed the range. It also created the previous swing low. At this point, we can simply enter a long position. Our stop loss will be placed just below the swing low and will aim for 1 to 2 take profit. This time, the price hit our take profit. Now we are in a new trading day. This line marks previous day's high, and this one marks the previous day low. The price took out the previous day's low, but no 15-minute candle closed below it. The price closed a candle above the previous day's high. Now we need a 15-minute candle to close back inside the range before looking for a short position. There was no valid setup for the day. For now, this is our previous day's high and this is our previous day's low. For now, we are waiting for the price to take out the previous day's high and then close a 15-minute candle back inside the range. Once that happens, we can enter a short position. There was no valid setup for the day. This line marks the previous day's high and this one marks the previous day's low. Finally, we have a valid setup. The price took out the previous day's low and then closed back inside the range. We can simply go long here, place the stop loss just below the swing low and aim for 1 to 2 take profit. And price hit our take profit. Now we have a new trading day. This line marks the previous day's high and this one marks the previous day's low. Price took out the high, but there was a number candle closed outside the range, so this is not a valid setup. The price closed a candle outside the range. Now, we will wait for it to come back inside the range before looking for a short position. The price closed a candle back inside the range, so we can simply enter a short position. We will place our stop loss above the swing high and aim for 2 risk to reward take profit. And price hit our take profit. Now we have a new trading day. The price closed a candle outside the range. Now, we will wait for it to come back inside the range before looking for a short position. The price closed a candle back inside the range, so we can simply enter a short position. We will place our stop loss above the swing high and aim for 2 risk to reward take profit. And price hit our take profit. Price took out the previous day low. Now, we will wait for price to reclaim the range so we can enter a long position. Now, we have a new trading day. This line marks the previous day's high and this one marks the previous day's low. Here, we have a valid setup. Price took out the low and reclaimed the range again. We will put the stop loss below the low and we will aim for a 2 risk to reward. And price hit our take profit. Now we have a new trading day. This line marks the previous day's high and this one marks the previous day's low. We can enter a short position. Place the stop loss at the swing high and aim for a 2RR. And price hit our take profit. Now let's count all the wins and losses we had. We took a total of 14 trades in this backtesting session. Out of those, 3 hit stop loss. That gives us a solid win rate around 78% using 1:2 risk to reward ratio. Now of course, win rates can vary. Some weeks you might hit 90% and in others you could drop to 60%. That's completely normal in trading. But there is the beauty of 1:2 risk to reward. You only need a 33% win rate to stay profitable. So imagine what happens when you are consistently hitting 60 to 70% or more. Before using this in live markets, I recommend backtesting this strategy thoroughly. Understand the flow and build confidence. Trust the process and trade smart.